Bitcoin, you're talking about all the technical chart analysis and all the features of what's going on with the price chart of Bitcoin at the moment, and you can project that into the future. But what you end up with is a whole range of possible outcomes. So as you're talking at the moment, we could see Bitcoin going up to 40, 50,000. You could see Bitcoin dropping down to 10 or 15,000. You don't need me to tell you that. So there's a range of possible outcomes. It's just that some of those outcomes are more likely than others. And as traders, as investors, we want to focus on what is most likely to occur and what is the most likely outcome. So if I can just move on this slide and just explain to you that gathering the evidence, we take a whole range of predictions, both myself and Patrick, and we look at a whole range of technical chart analysis techniques. And by doing that, we can use a technique about a little bit like this one here for forecasting future temperature. And you end up with a cluster of predictions a few days from now, forecasting what the temperature is going to be, Bitcoin, and what we're expecting for the future of Bitcoin, and just advancing through the charts here. This is what the Bitcoin chart actually looks like. All I did there was I flipped the chart upside down. So what you were looking at a moment ago was the Bitcoin chart upside down, looking very bullish. But this is the Bitcoin chart as we prepared this slide for you a couple of days ago, and it shows the Bitcoin chart looking very bearish. Now, you don't need me to tell you what's happened since we sent this chart to you a couple of days ago to have a look at. This pattern has broken to the downside. So the technical analysis has given us a heads up what was going to happen next. And this bear flag on this chart, those little two dotted black lines that are rising up, that's a bear flag, and that's telling us the price is more likely than not to break down. We're below the key moving averages, and we're below the resistance line created by this geometrically perfect arc. So as long as that remains the case, the probabilities continue for Bitcoin to move to the downside. You can see the target zone. The target zone is anywhere between about $9,000 and $12,000. So at the moment, the technical chart analysis, for a whole variety of reasons, is saying that the most likely destination for Bitcoin in the next, I would say, sort of 4, 6, 8 weeks is that sort of 10 to 12,000 zone. The only thing that will change that prediction is if the chart breaks out. And by say break out, I mean it has to get outside of that arc, and it has to get above the green line as well, the 200-day moving average.
I have the Bitcoin chart right here, right under, Paul, and you'll see that Bitcoin, we don't have history previous to this cycle. It started right at the beginning, and it's just tracking this rising trend, of course, with more volatility. Right. But overall, it's starting to define some rising trend lines. And each of these trend lines, the more acute they are, that means the momentum is going up really powerful. But once these trend lines are broken, that means the momentum is slowing down. So even if the price goes up for Bitcoin, it's not going as fast as it did in its previously. And now Bitcoin actually broke down 1, 2, 3, 4, 5, 6. This is a very valid trend line, and it broke down below that. So the momentum is slowing down. It's not, you want to go in the train who's leaving the station, which is garnering momentum like it did back in 2011, like NASDAQ. That's where you want to be. You don't want to be when the momentum's slowing down, because even if it does go up, Paul, you're not putting the odds in your favor when you're going into an asset class which has ran for 10 years, did great returns, and it's starting to slow down. And right now we see the NASDAQ also has definitely broken down of a rising trend line versus PPI. And I'll just show you one more, just this one. So this is the big picture chart. So I don't have NASDAQ going back to 1914, but the SPX is pretty much, it tracks pretty much the NASDAQ. It's the top 500 companies, and right now they're mostly tech stocks. So here's the cycle that broke down of this rising trend line. So this is SPX divided by, adjusted for the inflation or producer price index. 1, 2, beautiful rising trend line, beautiful 7-year moving average, broke down close below both. For me, that's a clear breakdown of momentum. So even if SPX has a rally, and this chart dates from July 13th, even if the SPX has a rally versus inflation, until it does either a new high or closes above what I call an early breakout line, eventually there probably going to be some retests here, you're not on the good side of the train. And here is the same break from the 1980, the legendary 1980s US equities bull era, when it broke down, same time as NASDAQ. You don't want to be long anything that's US growth stocks right here. And I'll bring this is what people don't see. This is the cycle that happened the Nifty 50, right? From 1950 went all the way up to 1969. US equities were invincible. And what happened? Once again, 1, 2, 3, 4, 5, a rising trend line, perfectly broken, momentum slowing down. And after that, there's an echo bubble, but it cannot do a new high. And then after that, you're just vulnerable. You're just on the wrong part. And this happened, what? It happened again. It happened in 1920s, beautiful bull run for US equities, broke down versus inflation. So you just, from a risk to reward perspective, the rallies should be sold here. Anything that's tech stock, anything that's Bitcoin, until they could prove otherwise, you sell those rallies until these early breakout lines, like these ones here, until they're broken out, until you get like a little star here and you're above a 7-year moving average. That's when you get out. That's when you get back on the train. This is the NASDAQ. So the lines in the back here. Do you see my moving cursor, guys?
Mm-hmm. Yep.
Yeah.
That's a NASDAQ divided by the producer price index. So this is called a sleep mode line. It's a strong angle of ascent. It's a strong momentum in favor of NASDAQ and tech stocks. So this was the .com bubble. And here, blow off top. So that's NASDAQ outpacing inflation. Like, you don't want to hold any gold. You don't want to hold anything when the NASDAQ's performing that well. That means the capital flows are going into tech stocks. As soon as that breaks down, then the momentum has shifted. You don't know if it's going to bounce back up, but in this case, in .com bubble, it was just a huge underperformance of the NASDAQ and a huge outperformance of inflation. And we all know that gold, silver, all that stuff, the oil, they did great from 2000 all the way to 2011, when the NASDAQ broke out versus inflation of this early breakout line, and then it stumbled a little bit. But then in 2012, it did a horizontal, I could have drawn a horizontal line here. It broke out. You go low gold, low silver, low oil, and you go heavy on NASDAQ right here.